everyone. Welcome to this conversation on ELSS and PPF. My name is Deepika Jaikishan and I am from My Way Wealth. ELSS, or otherwise called equity-linked savings schemes, are mutual fund investments providing a tax benefit. PPF, or Public Provident Fund, very widely known, backed by the central government, gives us a fixed rate of return and is a widely chosen option for investment in tax saving. So which one of these will come in aid when you need money in time of an emergency? It is important to keep in mind that a PPF investment is locked in for 15 years. A partial withdrawal can be made after the 7th year and the fund can be withdrawn prematurely in case of situations such as severe medical emergencies. Also, in such a time, the fund should have at least completed 5 years. An ELSS is nothing but a diversified equity fund with a lock-in period of 3 years. Post this period of 3 years, you can withdraw your money at any point in time for any reason that you might need it. If I were to simply compare the taxability on the ELSS and the PPF, the case for ELSS still is stronger. While the PPF is tax exempt at the time of investment, so as to say that if you make a 1.5 lakh rupees investment in the PPF, it's tax exempt. Also, when the money matures after 15 years, your returns are also tax-free. In the case of ELSS, which is eventually nothing but a diversified equity fund, the tax treatment is like that of any other equity stock or equity mutual fund. Suppose I make an investment of 1 lakh in a ELSS fund, and at the time of maturity of 5 years later, the value of my fund is 2.5 lakhs. The first 1 lakh of profit is tax-free, which means any equity gains of up to 1 lakh are tax-free, and there is a flat 10% tax on the residual amount. In this case, I've made a profit of 1.5 lakhs, where I will pay a 10% tax on 50,000, which is 5,000 rupees. If I were to compare the returns on the PPF and the ELSS, they're significantly different. Let's assume I made an investment of 1 lakh rupees into the PPF in 2010 January, and I made an investment of 1 lakh rupees into an ELSS at the same time. The value of my PPF investment right now would be close to about 1.8 lakh rupees, while my investment value of the ELSS would be about 2.9 lakh rupees. It's for you to see how beneficial it might be for you to invest into the equity-linked savings scheme. If you were to ask me, Deepika, should I make an investment in the PPF and in the ELSS? I would say no. Reason being, you probably already have 24% of your basic going into your employee provident fund. The employee provident fund and the public provident fund are not too different from the point of view of return. In fact, your EPF return is slightly higher than that of the PPF. While you already have 24% of your basic going there, it would make complete sense for you to make investments into equity-linked savings schemes which would outperform an investment like PPF over a 15-year period. Coming to the part of how do you invest into an ELSS fund. Interestingly, you could download the My Way Wealth app on the App Store or on the Play Store. On the app, we have an option of Save Tax. All you have to do is plug in the amount of investment that you want to save as taxes, and we would recommend the most suitable funds for you and help you invest going ahead.